Hello and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX. Apologies for that. So today we'll be talking about the top market events that are currently moving markets. So we'll talk about the gold and the current patterns in gold. We'll also be focusing on the US dollar pairs and the current chart setups. And of course, the main event of the day, which will be US retail sales data. So kindly give me a sec. I need to fix something here on the background. Something that is bringing some background noise. Once I fix this, I'll be back in a second. Awesome. I'm back. So good morning, Norman Kimani. Good morning, Edward. Remember that this session is not investment advice. It's not a recommendation to trade. So you should always do your own due diligence. So let's get things started with the economic calendar. And as you can see, there's quite a number of things happening in the markets today with early morning news impacting the Australian dollar. Of course, we just had the UK data at 10 a.m. So we'll go through that and then we check out the retail sales report. So early this morning, we had major news coming in from Australia. This is the employment change as well as the unemployment rate. So unemployment rate basically ticked up to 4.0%, up from the previous reading of 3.9% in November. Whereas the number of jobs created in the Australian economy in December rose to 56.3k jobs. And this was much better than the expected 14.5k, of course, higher than the previous 28.2k, which was basically revised lower from 35.6k. So the Australian dollar had an immediate reaction, strengthening against the dollar. But then later on in the session, lost. And now as we enter the London session, we are seeing the Australian dollar making some form of recovery. So we'll be checking out that on the charts. So over to the European side, we had German final CPI coming in at 0.5%. This was higher than the expected 0.4% and of course higher than the previous reading of 0.4%, basically showing that there is increasing inflation in Germany. We have seen that happen in the US as well as other major economies, meaning that we could be getting into a second round of increasing inflation. So as for GDP, in the UK, month over month, we had a miss of 0.1%. We expected to see 0.2% for the UK economy, but instead we got 0.1%. Yes, it's an improvement from the previous reading where we had negative 0.1%. But now we are seeing GDP missing, whereas also other key metrics in the economy missed expectations. So construction output came in as expected at 0.4%, a big improvement from the previous drop of negative 0.3%, whereas goods trade balance came in at negative 19.3 billion, similar to what we saw in November. And this was revised from 19.0, meaning that it was revised lower. Index of services, quarter over quarter, did not have any change. It was still at 0.0%. Industrial production performed worse, down 0.4% versus unexpected 0.1% positive. Also, manufacturing production was down negative 0.3%. This was worse than the expected negative 0.2%, basically showing that a summary of the UK economic data showed a slowing down economy. So in summary, the British economy grew 0.1% month over month in November 2024, recovering from a 0.1% contraction in both October and September, but falling short of expectations of a 0.2% increase. The services sector was the largest contributor, which had 0.1%, driven by accommodation and food service activities, which was also up 2%. Computer programming, consultancy 1%, and telecommunications 1.2%. However, administrative and support service activities declined by 1.2%, particularly rental and leasing activities were down negative 2.4%. The construction sector expanded 0.4%. Conversely, the production sector contracted by 0.4%, weighed down by 0.3% decline in manufacturing, particularly in manufacturing and repair, which was down 2.1%, and the production of basic pharmaceutical products and preparations down negative 1.9%. Other declines were seen in mining and quarrying. This was down negative 1.5%. And water supply, sewage, waste management, and remediation activities were down 0.3%. Considering the 3 months to November, the GDP showed no growth compared to the previous period. So you can see the summary analysis for each of the last months. So there was a contraction in the UK economy in September as well as in October. But then in November, a slight uptick, but it missed the expectations of 0.2%. So that being said, also looking at other items in the economic calendar, you'll notice that we have major news coming up at 4:30 p.m. So in this case, we'll be mainly focused on the retail sales as well as the core retail sales, unemployment claims, and the Philadelphia Fed Manufacturing Index. So whenever we talk about retail sales, it's basically a survey that is conducted by the Census Bureau of the US. And this survey looks at the major retail chains, the Walmarts, the Amazons, to try and understand the receipts or the number of retail purchases that are made in a particular month. And once they tally this information, they're able to tell whether Americans are buying more stuff or whether they are buying less stuff. So comparing this data month over month, you're able to see the key trends in the retail sector. So it's also important to understand that manufacturing production is basically based on demand. So companies that are doing manufacturing or creating services, they will do so based on the demand they're seeing in the economy. So if retail sales are higher, then they tend to produce more, and this tends to be a good signal of a well-performing economy. So currencies tend to correlate very strongly with retail sales, where if retail sales are increasing, the currency tends to strengthen. And if retail sales are slowing down, then we also tend to see the currency weakening. So core retail sales are much more stable because they measure the same receipts, but they exclude the expensive automobiles. So when you include the cost of cars when you are measuring retail sales, then you get a much more stable measure of retail sales within an economy. And investors tend to focus more on core retail sales, but also the overall retail sales is equally as important. So unemployment claims is the number of people who filed for unemployment insurance for the first time during the past week. So in this case, we're expecting 210K and an uptick from the previous reading of 201K in the prior week. So in this case, when you see more and more people filing for unemployment claims, then it basically means that these guys are skilled and they can't find jobs in the economy, and it's usually a negative sign about the job market. So we'll be following this closely to see the changes in unemployment claims. So it's usually the earliest economic data. The market impact fluctuates from week to week. There tends to be more focus on the release when traders need to diagnose recent developments or when the reading is at extremes. So in this case, if you follow the trend and try to understand what has been happening and you look at the actual data, then you'd notice that we haven't had much of a change in unemployment claims for a while. So if you go all the way back to August last year, we got 231, 227, 230, 219, 218. So we have not had a major shift in unemployment claims in a long while. And this basically means that the more important data to be focusing on this afternoon will be the retail sales data month over month, the core retail sales month over month, and of course, we also be looking at the overhead year-over-year changes. So you can check these out on the trading economics calendar. So trying to find the data here. So retail sales month over month. This one is usually more detailed. So you'll be able to see the export prices, import prices, initial job-based claims, Philadelphia Fed Manufacturing Index, retail sales, ex autos is basically core retail sales, continuing jobless claims, export prices, import prices, Philadelphia Fed business conditions, the capex index, employment, new orders, prices paid, and so on. And then this is the one I was looking for, the retail sales year over year. So this is a measurement of the month of December last year compared to December the previous year. So this way you're able to see a much bigger trend. In this case, the overall retail sales in the previous reading was 3.8% in November. And now we're expecting a slight uptick to 4.0%. So clearly, if we see 4.0% or even higher, then that should be very positive for the US dollar. And of course, if we miss the expectations, then we could be seeing the dollar losing some gains. So that being said, I believe now it's time we look at the Forex market and try to understand the major shifts. Of course, as we mentioned on Monday, and we have kept talking about this, one of the weakest currencies in the market is the UK pound, which is down 2.38% since the year started. Whereas one of the strongest currencies is the Japanese yen, which is up 0.82% against the dollar. And main reason we are seeing the Japanese yen gaining is because there is an overall expectation that next week we could be seeing the Bank of Japan going for a rate hike. And a rate hike would mean the JPY strengthens. And the information is already being reflected in the Japanese bond markets, where the Japanese government bonds have been gaining in terms of yields. And that's a positive sign that the market is trying to price in a rate hike by the Bank of Japan. So in that regard, we have seen the JPY strengthening. So the Australian dollar is also surprisingly strong, up 0.44% since the year started. And if you look at the last 24 hours and the performance of currencies, it's the JPY that has had the most surprise, gaining 0.27%, whereas on the weakening side, it's the pound as well as the Canadian dollar. So that being said, I believe we can jump straight into some technical analysis and try to understand what are the key chart patterns. So checking the comment section here. Hi, Edward. Can see Ronald, Gideon Dongo, thank you. And hello again. Noniza Jack, good morning. For Plumbing Enterprise, hi, Zero King, thank you for joining. Consist me the facts, good morning. Robert Kavare, good morning. Remember to like and share the video with other traders so they can also benefit from the presentation. So let's jump straight into some technical analysis and try to understand what are the prevailing patterns today. So today I'll be starting with one very familiar chart, and that's the chart of Bitcoin. So we saw Bitcoin dipping in the prior week, going all the way and bottoming around 91.5. Then at the beginning of this week, we had Bitcoin dropping all the way down to 89,322. And since then, it has gained by over $10,000. So from the bottom that we saw here on Monday, we have seen Bitcoin gaining by 13%, or basically $11,000, before raising some gains, and now it's trading at 99,800, and it's more likely to get to 100,000 as we continue trading today. So as we get more and more liquidity coming into the markets, there's a good chance that Bitcoin could breach the $100,000 mark later in the day today. So of course, it already attempted in the Asian session, got to 10,878, pulled back, and now we could be seeing another push towards the upside. So as for gold, we had this triangle that we were rising earlier in the week. Eventually, there was a breakout towards the lower side, and it bottomed at 26.56. And since then, we have already seen gold progressing really well. So on Tuesday and Wednesday, it was more of a positive momentum. So there was a major resistance around 26.98, and we have just broken above that, which basically implies that we could be headed much higher. And of course, the next resistance area is around 27.18. So I think this is a no-brainer. We expect some further momentum upside. In this case, market breaching this area and heading for the resistance at 27.18. So we should be looking at this on the 4-hour chart to try and understand that there is this major resistance area that the market is about to retest again and perhaps even break and move higher. So today, all positive on the upside momentum on gold. So as for Brent oil, we had a flag kind of formation here that lasted 2 days. And then yesterday in the afternoon, there was a nice break and the market has continued pushing higher. So we had a major resistance here. We broke right through it, got into a different high here at $81.7 per barrel. But since then, you can see that the market has been pushing back down today. Of course, it's within expectations that after this nice break of the flag, we could be seeing the market pulling back downwards again. So remember, oil seems still to be very bullish. So we could be waiting for a pullback or trade it back downwards. But for now, it seems more likely that volume is towards the downside after having a very successful bullish momentum yesterday. So it might be reasonable to wait for the market to pull back and look for other buys around these areas here. But for now, it seems more likely that the market is pulling back downwards. But then if we see evidence of buyers coming in, the idea is to be looking for buys around these zones here. And if we happen to see momentum coming in, then we'll be looking for an opportunity then. But for now, it doesn't make sense to be looking for short selling positions. So US equity markets have really recovered well after the big sell-off that we saw last week. So since the week started, we started with a big drop here, but then the market changed direction. So yesterday, after the CPI data, we saw the Nasdaq making a very strong rally, got to our target of 21,152, and today it's extending the rally and now heading to a very familiar trend line on the 4-hour chart. So clearly, it's getting really close to this particular trend line. So we should be expecting to see the market at least testing this trend line before making the next move. So it's the same for the Dow Jones. So if you look at the 4-hour chart, we are seeing a very strong momentum upwards, and our resistance area is somewhere around 43,467. Also, the current price level seems to be having some form of resistance here. So we could be seeing the market playing around here for a while before making the next move. You can already see after yesterday, the market got to this area. It has begun struggling to form the next leg. So clearly, it's more in a consolidation zone, and we could be seeing this playing out for a while before we see the next breakout point. So for the Russell 2000, it had a very strong momentum yesterday after the CPI data. So from the 4-hour chart, this is how it looks like. We had a breakout towards the lower side. Didn't hold for long. Market came right back into the pattern. And now, of course, we know and understand that this was a previous area of resistance. So the market really struggled to break that area here. So now you can see the market, after the big move, is getting into a consolidation. So we'll be observing that, especially during the New York Open. And for the SP 500, we have had a very strong momentum, goes to our target, pushed even higher. And today it's retesting the familiar trend line on the 4-hour chart. So clearly, we should be expecting to see a retest of this area here. And once the market tests, then we observe for either a break or a bounce. So this will be a key level decision point for SP 500 traders. So on the currency side, we have seen the euro attempt to make a comeback for the better part of the week. So notice how there was a nice bounce on Monday, Tuesday even higher, Wednesday even higher. But in the afternoon, we saw the dollar regaining some strength and changing the direction here. And today we are yet to see some momentum coming into the markets, but it's more likely that the euro continues to weaken against the dollar. So if you look at the daily chart, it's a very strong bearish momentum. Yes, we had a very nice bounce and rejection of lower prices at 1.0177, but the theme of euro-dollar parity is still in play. So we should be expecting to see some further downside, especially after the big sell-off that basically happened towards the end of last year. So since we started this year, notice that the first momentum that we saw here was a bearish momentum. Euro started to regain, but sellers still came in and pushed it lower. So after 2 consecutive days of bullish momentum, the third day was bearish. So now we are potentially looking for some further downside action, but then the setup is not yet there. We haven't seen the setup playing out. So from yesterday in the afternoon, it seems more like the euro has been trading sideways. So we'll be monitoring this range to see the eventual break, with an overall expectation of some further selling action similar to what happened yesterday in the afternoon. So for the pound, we just saw the GDP data showing a very weak UK economy. Of course, the pound has been the weakest currency in the market, so potentially we could be seeing some form of breakout happening here, and the market going ahead to retest the previous low that we saw at the beginning of the week. So potentially a break here dropping to 1.21. So the yen has become a really strong currency. So having traded in this channel for about 4 weeks, we eventually had the breakout here yesterday, and the yen continued strengthening to the dollar. So today in the morning, other trading, we had the yen continuing to strengthen, though in the Tokyo session, there was some form of recovery, but now we are seeing the market going ahead and pushing for further downside momentum. So perhaps we should be looking at the market retesting the day's low. So potentially the USD yen getting back to the previous low as traders continue betting on a stronger yen following the expectation of a rate hike in the next Bank of Japan meeting. So the Nikkei 225 index has really struggled to bounce from this area here. So if you look at the 1 hour time frame and you try to observe the current setup, then you notice that in around this area, the Nikkei 225 index has really struggled to break above. And now we are more in a consolidation zone. It looks more like a triangle, and we should be looking for a potential break towards the lower side. So in this case, we just bounced from the upper trend line, and we could be seeing the market drop into the lower one, but then a break would be a much more interesting idea. So for the dollar trading against the Swiss franc, you can already see the dollar losing some momentum, but yesterday's action was very strong. So after the big sell-off during the news, the dollar recovered immediately. So in this case, even if we are seeing some pullback, the idea is still the same. Once we see evidence of buyers coming back, then we'll be looking for bullish opportunities since the longer term trend is still very bullish. So this has been the longer term trend. So notice how there was an attempt to break towards the lower side. It failed, and immediately the market pushed even higher. And now we are seeing the market attempting to push further downwards. So if we see buyers coming in, then we'll be looking for an opportunity then. New Zealand USD also had a very nice movement, making a very strong rally against the dollar, kept doing so even yesterday after the CPI. But then every move upwards is met with more selling pressure. So we will be looking for potential breakouts, especially along this area here. So we know that the market could bounce from this area and push even higher, but it could also break. So we continue observing the price action around this area to see whether evidence suggests we bounce or we break. Then we can make a decision based on that. So dollar trading against the Canadian dollar, you can see a very strong bounce. So CAD is emerging as another weaker currency. So from the forward chart, this is how it looks like. So the market is still in a range. I would say trading sideways for the better part of the last 5 weeks. And now we just bounced from the lower trend line, which basically implies that we are headed even much higher. And if there is anything to work with, then it should be this tape right here at around 1.44097. So we could be seeing the market extending this bounce to around 1.44097. So European equities, they made some really good progress after the big sell-off late last week. And now what we are seeing here is the market getting to a resistance area, attempting to break, and finally getting sellers coming in. So we should be expecting to see some further pullback. The EU 50 also made a very strong bullish momentum, and now it seems to be finding some resistance around this area here. Notice that this was a major resistance area at around 5,070, and now after breaking above that area, we are seeing some form of profit taking playing out here. So French 40 also making a very impressive rally, but now we are seeing some form of pullback. So overall, European equities are quite bullish, with the German stock market index basically forming a new all-time high today. So the DAX has never traded this high before. So notice even on the monthly chart, we have seen a very strong momentum. On the weekly chart, strong momentum daily, strong momentum. 4-hour chart, there was a strong momentum, but it seems to be erasing some of the gains. So more likely some form of profit taking. So we'll be observing this area here to see if this momentum continues or if the market decides to make some pullback after forming a new all-time high. So that's it for today. I'll be checking the comment section to see if there's any questions. Respond as we approach the end. So remember that on the 24th, we'll be having a masterclass event in Eldoret. So make sure to check out the links in our socials, book your seat and prepare for a great session. So also, we have new episodes coming up for the Bullish Banter podcast, as well as the Financially Incorrect. And if you are a beginner and you are just looking to start your trading journey, check out the Novice to Pro series, which is available on FX Pesa YouTube. Learn how to trade, practice, and then join us on the market snapshots that happen every day at 11. Then from there, we'll be able to grow and learn together. So I can see on the comment section, there has been suggestions to check out on gold. We covered that. Check out the NASDAQ. We covered that. Check out BTC USD. We covered that too. You're asking for the link of Telegram. Kindly check my bio on X. Username is basically Rufus KE. So, good question here. During the inauguration of Trump on Monday, can we expect the mega moves in the market like we saw during the election day? And which session is the best to catch good moves during this day? Of course, it's the New York session. It can't be any other session. So, of course, there is a very so much anticipation about the inauguration day. And the main reason there is so much anticipation is because there is quite a number of directives that Trump is expected to issue on his very first day in office. So the idea is to check the campaign promises that Trump made and the declarations he's expected to make on the first day in office. And once you find a list of those items, then look at the markets that are going to be affected by those declarations. So in that order, for instance, we know that he promised to fire Gary Gensler, and Gary Gensler has been anti-crypto for a long time. So if he gets fired on the first day that Trump gets into office and he releases Rosa Ulbricht from former Silk Road platform, then we could be seeing some form of positive action happening in the crypto markets. So we also expecting other directives that could have significant impact. So just check a list of the things he has promised and try to analyze each and how it might affect the markets. So once we start seeing those declarations after the inauguration ceremony, then that could cause some havoc in the markets. So expect a lot of action on the 20th of January, and that should be next week on Monday around 4:30 p.m. So we have some good feedback here. Thank you both, you and Robert Mbogo. 3 years now in trading. You changed my life, you both, by how I see the market and analyze it. So thank you for the great comment. Last question here is on New Zealand card. Normally we don't cover crosses, but for this one, let's do it. Where is it? So as usual, we try to identify the longer term trends. So clearly, New Zealand CAD has been on a very strong bearish momentum, going back to around September 30 last year. So since September, the New Zealand dollar has been losing to the Canadian dollar. Of course, trends have ends. They don't last forever. So this was the major bottom here, and this was as per March last year, which means that this was the lowest price for New Zealand CAD. And then you go to the forward chart, you notice that in the last week, we managed to break below that. So we found some form of support for the downside. And then also considering the current trend, clearly on the forward chart, there seems to be some form of support along this line here. So it's a market that has been strongly trending downwards for quite a period here. I would say this is a major inner trend line with several attempts to break it failed. And now we are looking at a market that is basically on a cycle where it's bouncing towards the upper side. So if you insert an indicator, in this case, I'll be using a very simple indicator. We call it the zigzag. You can see the different swings in this chart. So it basically shows you the different swings. It doesn't tell you anything about where the market is headed or where it's going, but you're able to visualize the different phases in the market. So you're able to know what kind of swing are we in. And right now, I would bet that we are on the upswing. So we are basically seeing the market swinging from the lower trend line towards the upper trend line. Yes, there has been some form of struggle with some support area around this area here, really being hard to break. But overall, we expect the market to be swinging from this area up towards the upper trend line. So for today, we started with some good action here, and we could be seeing some further upside. So if I had to set a TP1, I would be looking for this area here. And of course, this area will be more important as the next target. So potentially, we could be seeing the New Zealand CAD heading towards this area here as it looks to complete the cycle and remain within this pattern. So that's it for the day. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next one. So the question about Euro USD, we have already covered it. So kindly check the session. It's already available on X, and it's also available on YouTube. Thank you very much, everyone, and have a fruitful trading day.